how you can do a top-down analysis. So let's begin from our H4. The criteria to making entries are just few things you need to observe. Number one, know your structure. When you determine your area of structure, whether a buy, a sell, or a ranging market, you mark out your point of interest. Your point of interest can be, depending on your pattern of trading, can be an order block, can be a support and resistance. It can be your supply and demand zone. It can be a fair value gap, which is an imbalance. A smart money cube determine our order blocks. In my video where I did a combo strategy, how I combined my trading strategies, my indicators with smart money concept, I've explained how we can do it using a fair value gap and a smart money cube. So I'm looking at these order blocks. I'm going to incorporate everything together. So let's take it forward. Remember, price will come like this. It will go up. Then price will come down and take this lower low. So in a downtrend, it is expected for price to take a lower low. So price will make a retracement. So here now will be our lower high. Price will come down again and take this lower low and create a lower high. So in a downtrend, price is not expected to take this lower high. So price will pull up again and then push down and take away this lower low. So the liquidity of the downside, which is the lower low, is always expected to be taken in a downtrend. Okay, so this is a typical downtrend, a lower high. So anytime price take the liquidity of this lower high zone, anytime price take away this liquidity of a lower high zone to the upside like this, it means there is a break of structure. So, and in an uptrend, price moves in this way. Price will move up, it will come down, it will move up. So here will give us a higher high, and here is our higher low. So price will come down. It will never take this liquidity, it will only take liquidity of the upside. So here will become our new higher high, and here is our higher low. So price will come down again and move to the upside, and it will take the liquidity of this side. So price is not permitted to take the liquidity of the higher low as far as it is an uptrend. Once that happens, it becomes a break of structure. So how do we trade? So this is your order block that you have marked. So you are expecting price to return from here now, as it's coming, to tap into this order block. And after that, it will now move to the upside, tap into the order block, and then continue to the upside to take the liquidity that is sitting here. And at times, it might not tap into this order block. Perhaps there is a fair value gap in between this zone. So what price will need to do is price will only come into this fair value gap. So price will only come up, tap into this fair value gap, stop in this fair value gap, and then push to the upside. It can be a smart money cube that is inside here. Price will tap into the smart money cube and then return. So the opposite is for a downtrend. So let's continue. Here is our order block. That is one of our order block. Now what validates this particular order block is because this order block here take away this liquidity here. this price came down and take away this liquidity. So that is what validates this order block. So the order block is here. Price came all the way from the upside here and take away the liquidity of this order block was taken. So it means this order block is a valid order block. So what else do we want to see? We want to now see price pulling back into this order block. But now price did not reach this order block. Why? We have marked our order block. We want to see as well if there is a smart money cube or an imbalance in this leg that take away liquidity, which is from here to here. So if we observe carefully, we will realize that here we have an imbalance. You can see this zone. This is an imbalance. But despite that, I have to put my Fibonacci and to see whether that imbalance is between the range of 50. Okay, so this imbalance, you see, this imbalance is not within my range of 50. It is below 50. So I won't be considering this. Okay, you can see my 50 level here. This is my 50 level and this imbalance is below it, so I won't be considering this imbalance. What else? We have a smart money cube, and we have established before now that a smart money cube is a single opposite cube. After a series of bearish candles, you can see bearish, suddenly you find a bullish candle in between and then continue by subsequent consecutive bearish candle. So this single candle here is a smart money cube. So this smart money cube forms inside around the level of 50 to 61 zone of our Fibonacci tool. So this is another point of interest. So what do? I'm going to highlight that point of interest. This is applicable to every asset. I'm only using this as a case study. Now I have highlighted this. So what is the next thing? I will wait for price to pull back inside where I have highlighted. This is our H4 and this is the price pulling back into that zone. So 15-minute time frame, price came in. This is the first time price came to touch the zone. You can see it here and look at this perfectly. There are two ways you can make this entry. First, number one condition on your 15-minute now is that you want to see your commodity channel index around your 90 and 10. Condition number one. Number two, look at your price should be at the upper Bollinger Band, piercing outside the upper Bollinger Band. You can see that my upper Bollinger Band price is piercing outside of it, showing me an exhaustion point. So from there, you can see a chart pattern. This is an M pattern. Look at it. So you can use this chart pattern to make your entry. That is one. Another way you can use your trend line is break out of this trend line and then retest it and it continues to the downside. This is another way you can make your entry. And then you can as well make this entry using your moving average. You can see that on this moving average, price closes below our moving average 10 here, and then that becomes your entry. Okay, so you would have made this, and then when price gets to this zone, do you see that immediately price gets to the level of 20 and 10, you exit your trade. And then for the second time now, price went in again remember, price is still inside our point of interest, and it went there for the second time. You can see that move. Okay, that is it, and give us that sharp move from there to the downside. And what do you see? Price move up, come down, another M pattern. Remember, we have different type of M. This one, the first leg is longer than the second one, so we have this M pattern from outside of the upper Bollinger Band, and here there is a divergence. You can use that divergence for your entry is coming from outside the upper Bollinger Band, or you wait for this M formation, okay, or you wait for a close below the moving average, or you use your trend line on your lower time frame to validate your entry. So this is how it works, and immediately price get down here, you exit your trade. And I believe you have learned something new. It's a very straightforward process. You mark out your point of interest, you wait for price to pull into your point of interest. Don't forget to give this video a like, share, subscribe, turn on your notification bell, so you'll be the first to get notified when you upload our next video. Thank you for watching.